if you take a look at this overall, Lizzie, this is a situation in the markets where some investors, rightfully so, are a little nervous about putting money to work when they've seen such damage already done. Is this, in your mind, still a constructive environment to be putting cash to work?
Good morning, Dom. Excited to be here. I think that there's still a lot of uncertainty in the market. There's a lot of uncertainty as it relates to what the Fed's going to do. We're watching closely the CPI report this morning. So I think that there are certain parts of the market that still offer long-term opportunity, but you have to be selective, and quality matters in this environment.
So if it is quality that matters, what exactly does quality mean in your mind? There are many factors, Lizzie, many types of characteristics that people look for. In your mind, what exactly does that mean?
Yeah, I think quality means so many investors right now are focused on style boxes. You know, is it time to sell value and to go into growth? I think you want to be focused on key fundamentals. Look for companies with strong free cash flow. Look for companies with strong balance sheets. Cash is king right now. Low debt load. So I think that to your point, energy has been strong. I think energy will continue to be strong, really given the structural imbalances we're seeing in commodities and energy prices. But, you know, from there, I think from a sector standpoint, you have to be very selective and look from a bottoms up standpoint as to what to invest in.
All right, so let's talk, Lizzie, about bottoms up, because we like talking about these ideas. Lizzie, when it comes to energy, are we talking about the oil majors like Chevron and Exxon? Are we talking about the midstream pipeline companies? Are we talking about smaller to mid-cap exploration and production? What exactly are you putting clients into right now?
Yeah, we like the major integrated oil and gas companies. So look at, as you mentioned, Chevron. Chevron has excellent margins, particularly in their refinery business. Their balance sheets are stronger than ever coming out of COVID. They're lean and mean. They're buying back shares. They've got just announced $10 billion of buyback, up from $5 to $10 billion previously. They're growing their dividend at 6% a year. They're paying down debt. So that's the type of company we really like in the environment we're in today.
So the energy trade has been consensus for a long time. No surprise. I mean, you just look at the performance. It's a momentum trade for sure right now. But what about the contrarian play, which is technology? Do you still like technology? Do you put more money to work there?
Yeah, I think that there are some opportunities. Some of these big mega cap tech stocks have been beaten up so hard since the first of the year. Take a look at Microsoft. You know, Microsoft has been absolutely crushed with a lot of the other software companies, but not all software is created the same. Microsoft's trading at a 20% discount to its 5-year PE. It is an absolute cash cow. They had $130 billion of cash, and compare that to their total operating profit at the end of the year was $72 billion. So you're going to see margins continue to improve as they migrate to the cloud. So, you know, I think that there are opportunities in tech, but you've got to be selective.
All right. So, Lizzie, I mean, you are one of the nation's top financial advisors. What's the biggest concern that your clients are echoing to you right now?
People are scared. You know, people are asking, they want to hear that we're out of the woods, and I don't think we're out of the woods yet. So I think that, you know, from an advisor standpoint, the key is staying the course, having an asset allocation that clients can sleep with at night, and that's really how you win over time.